entertainment break for us all, which was most welcome. Thank you. Anyway, we'd like to reconvene the meeting now if we can, and I'd like to welcome our guest, Noah, representing the Macau Investment Advisory Group, to present his, there's two papers, and one of them we'll have to go into do that afterwards, public excluded for. So thank you, Noah, for your presentation. I'm sorry about the delays and the timelines.
Thank you, and good morning. Good to see you all on a lovely sunny day. And I will walk you through the performance report for the first quarter first. And we've had a very strong start to the year in share markets. The first quarter was very positive, and that was mainly driven by positive news out of the US in terms of the economy. So positive surprises there in terms of growth being still very strong despite the high interest rates. And also investors are quite positive about artificial intelligence in terms of what that could mean for company profits. That has helped to drive markets higher as well. In particular, stocks like Google, or Alphabet, I should say, Meta and Nvidia have really helped to drive markets. However, the performance in the first quarter actually has been broader. Markets like Europe have performed very well as well. So if we turn to the performance report, page 1. Sure, what are you?
Do you want it brought up? Noah, or everyone's got the agenda, so
okay.
we can bring it up.
Thank you. So if we go to the first page, thank you. We can see there that the value of the portfolio, the blue line, has started to tick back up towards the inflation-adjusted value, which is that orange bar. So a positive development, and you can see that over the last few quarters, in fact, the portfolio has started to move back up to that inflation-adjusted value. If we move on to the next page, page 2, this shows the overview of the assets and cash flow in and out of the portfolio. We can see there that over the quarter, we've had very strong investment gains of over 2 million and no cash flows out of the portfolio. And this is in the table top left-hand corner. And you can see since inception of our reporting, we've had outflows of 2 million out of the portfolio, but that has been more than compensated by investment gains of over 7 million. So a very positive 6 months for. At the bottom of the page, we can see the asset class breakdown. So this shows the percentages of the portfolio, both the current allocation and relative to the strategic asset allocation. And we can see there, comparing it to the ranges at the far right-hand side of the table, everything is within rebalancing ranges at the moment. However, an overweight to growth assets, if you look at that yellow highlighted line, you can see that there's an overweight to growth assets, and that is a function of very strong share markets driving allocations higher. Might just quickly stop here. Please feel free to ask questions throughout the report.
I guess just an observation that overweight is moving towards the alignment of reweighting of the portfolio that will happen whenever you get the green light to proceed with it. So it's not a bad thing in the moment.
Yes, that's right. And as we will see later on as well, it had a positive impact on performance.
Do you else have any questions for Noah on the?
Okay. Moving on to the next page. This shows the portfolio return, both relative to benchmark and relative to the inflation target. And you can see that over the quarter, the portfolio unfortunately underperformed the benchmark. However, it performed ahead of target. If we look over longer time frames, we can see that actually performance has been positive against the benchmark. So for example, looking at the 10-year period, so second from the right, you can see that the portfolio actually net of fees outperformed the benchmark. So 5.63 against a benchmark of 5.52%. And just to bring that to life a little bit, that looks like a very small difference of 0.1%. If you actually compound that over a 10-year time frame on a 100 million portfolio, that would be a 1.8 million difference in terms of value added through active management. It might look like a small difference, but over the long term through compounding, that can actually have a significant impact on outcomes. At the bottom of this page, we have the attribution analysis, which breaks down the differences to the benchmark into different components. So the first effect is what we call the asset allocation effect, and that measures how the portfolio is positioned against the benchmark and whether that has a positive or negative impact. And as I mentioned before, given that the portfolio is overweight shares, that actually had a positive impact. So a small positive impact there from asset allocation. However, unfortunately, a negative impact from what we label here as security selection, which is the performance of the underlying managers against the benchmark. If there's any questions here, I might move on to the next page, page 4. Which breaks down the performance into the different asset classes. So you can see the returns of global equities, of trans-Tasman equities, and the other asset classes, both over the quarter as well as over longer time frames, and also showing you the performance against the benchmark for all of these asset classes. A couple of things that stand out, as I said, really strong performance in global equities over the quarter. You can see here it's a return of over 9%. And over a year, it's actually close to 20%. So a very strong performance in share markets. In contrast, New Zealand, unfortunately, not quite as strong in terms of performance in share markets, so lagging global share markets over the quarter. Year and in fact over longer time frames now as well. The other parts of the portfolio unfortunately hadn't performed quite as well over the quarter. So we can see that real assets, so infrastructure and property, was actually negative over the quarter. And the fixed income, the more defensive parts of the portfolio, relatively close to zero. Unless there's any questions here, I'll move on to the next page, page 5.
Can I just ask, and you may or may not want to answer it, with our new portfolio profile, what would your best guess be in terms of the likely return for the last 12 months if the fund had been?
I don't have that number. I would have
right.
to come back to you on that. It would have been higher, that's for sure. With a higher allocation to shares, obviously, the return would have been stronger, but I can't give you an exact answer in terms of
That's all right,
by
thank you.
how much. Okay, unless there's any other questions, moving on to the next page. So this is just a breakdown now by fund managers, so one level down from asset classes, and again, looking at the performance over quarter and over longer time frames. You can see there at the top of the page, unfortunately, disappointing performance from Stewart Investors, and we'll possibly talk more about this later on. Otherwise, in terms of some of the, I guess, main differences over the quarter, first Sentier, so the second from the bottom, had a really difficult quarter, underperformed the benchmark quite significantly. However, important to point out there that if we look at over the long term, the since inception number, this fund manager has actually added value to Council's portfolio. There's no questions here on this breakdown, just moving on to the next page.
I'd
Yep.
just like to point out that, you've already identified the issue there, which will be corrected. Configured the investment portfolio. That will make a significant change. I think that's a very good report too, by the way. Thank you. Makes it very clear and easy to understand.
Thank you. Appreciate the feedback. So on page 6, last but not least, we have an overview of the more defensive managers in the portfolio, fixed income and cash. And typically, we wouldn't see a lot of movement or not as much movement against the benchmark for these portfolios. We can see that at the top, PIMCO through Fisher Funds had a really strong quarter. Wellington, in contrast, a bit more disappointing, and the two Mercer Macquarie funds very close to benchmark, slightly ahead net of fees. That were sort of the main highlights in the quarterly report. Happy to answer any further questions from councillors.
Any questions, anybody? If not, I'd like to thank you for the presentation and resolution. Yeah. Dale seconded. All in favour? Carried. Thank you for that. Now, Janine advised that we're going to move into excluded now. Your next paper you're going to present to us.
So we'll just have to do a resolution to move public excluded, and then you'll just need a little bit of a pause to stop recording.
Sorry, okay. Enjoy, thank you. Favour? Carried.